Hello traders, Gary Wagner here. Just after 10:30 in Honolulu, 4:30 in New York. It is Monday, March 18th, 2019, and this is the Daily Report for gold and silver. We have a muted gold market this morning, trading very much near the unchanged. Silver also with very little movement. Platinum and palladium are on the move, however. This is all in reference to the upcoming FOMC meeting, which will begin tomorrow and conclude on Wednesday. Although the anticipation is that the Fed will not announce a rate hike, there's two topics of critical interest, and that is the anticipated release of a dot plot, which they failed to release in January, and then secondly, the new schedule to liquidate their balance sheet assets. And to that end, we should see muted pricing up until that point. Let's go to the board. Gold today currently trading up about 80 cents at 1303.70, and that of course is basis most active April's contract. We are long in a June position at 1305, and June is trading higher this morning, up about 19 cents at 1309.80. So we've got close to $5 on that trade. Silver gaining about 0.2%, a 3-cent gain at $15.35, but it's really platinum and palladium that are on the move. $5 move in platinum, that's about 0.6% at $836.80, and palladium closing at a new all-time record high, up $23 at $1541.50. Quite some activity. Now, muted dollar also, and we should continue to see that throughout tomorrow, at least until Wednesday when we get the release of the statement, and that is trading down about 0.1% at 95.94. So traders, as you can see when we look at today's daily candlestick, decent range, definitely doji-like. In the case of today's action though, quiet in anticipation of the FOMC meeting, which will begin tomorrow. It doesn't indicate as much as it might if there was different type of fundamental news out there. Now, we definitely want to take a look at the highs that came in both today as well as Friday, because it seems like they're matching up identically to the 50-day moving average. Currently, we're up about 50 cents. This, of course, is April gold, 1303.40. It traded to a high today of 1306.70, and 1305.90 is where the 50-day moving average is. So it moved up above that, but did close back near the open. In terms of the lows, it did go back and test that $1,300 mark, because we had a low today of approximately $12.98. Now, when we look at that particular price point, meaning $1,300 on this chart, what we can see is a series of tops that came in beginning of this year, end of last year, that really showed some very, very strong resistance at that price point. However, we can see that once the market popped above that, that became a level of support, because now when the market traded lower after reaching what was the high of the year at that point, which was around 1330, and came back down, what we saw is it tested these lows at around 1310 rather than about 1300, these lows here. From there, we saw the market move higher, moving to the all-time record high this year at around 1350, before having a fairly significant correction going back to about 1280. I believe that that is where we concluded this intermediate fourth wave correction, and that is also what prompts me to believe that we are currently, in terms of our Elliott wave count, in a fifth wave. My target remains 1374, and that is based upon a fib extension. I'm using a 0.618 fib extension of wave 3 to forecast our upside target for wave 5. And since we had such a dynamic range in 3, we could see that kind of a dynamic follow-through in wave 5. For right now, my recommendation is to maintain your current long position and to maintain your current stop. We will look to see whether or not we want to move that prior to the conclusion on Wednesday of this month's FOMC meeting. And traders, lastly, I do want to take a look at palladium futures. On fire once again, moving close to their all-time record high. And in terms of closes, we are at a new record high in terms of the close, this being a daily candlestick chart. And the fact of the matter is that palladium closed very much at its high of the day. You can see that because there's absolutely no upper wick. The target right now is the absolute high that came in roughly at 1550. And that is what we're labeling as a third wave conclusion. Now, what's interesting is when we look at the correction that followed in palladium, it wasn't much of anything. In fact, it didn't even target the 0.23% retracement, which is typically what we look at as our most shallow retracement. And that, of course, is based upon simply taking a fib retracement of this third wave and then looking at a retracement of that move. And it's because it was such an extended and long wave that the correction itself, while it was in terms of dollars, roughly a move from 1550, call it, down to about 1450, $100 move down. In terms of percentages, it didn't even come to a 0.23% retracement. Nonetheless, it looks as though that correction has effectively run its course. We are back into rally mode, and that would put us into a fifth wave. We'll forecast where the fifth wave goes over the next couple of days this week, but nonetheless, an extremely interesting market. And as you all know, my target is well above current pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.